Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that the markets failed. TF failed essentially at its recent highs and put in a deep pullback, and ES ended up failing at the previous day's value area high and then reversing and breaking below that 40 to 42 area for an extended move lower and almost retested the previous day's low. So right now, heading into the open, the sell side is in control, and today the way that TF is setting up, we could actually get a new low on TF, which could result in a new low in ES and NQ. So right now we have to be pretty careful on the long side, and below 32 quarter, 34 quarter, sellers can maintain firm control, and even above that we could see sell side activity at every zone along the way. But 32 quarter, 34 quarter is really where the upside was capped after the big downside push in the overnight session. So that's the overnight balance high, and holding below it can result in continuation on the downside. And we're just going to be keeping an eye on TF as well, just to see if any buying comes into the Russell. Because if we do start seeing some buying activity in the Russell and a break above the overnight balance in TF, so breakout above 56, 57, that would tell us that the buyers are back in control, or at least trying to gain control in that market, which can result in some buying activity in ES and NQ as well. So we're going to be careful on the buy side. Focus is going to be more on the short side, especially if ES holds below 32 quarter to 34 quarter. A break above the initial resistance zone in ES would bring the 40 to 42 area in play. That's essentially the start of the breakdown in the overnight session, so that area can still attract sellers. But if the breakout is strong above 34 quarter, we'll just have to gauge it at that point. But right now the focus is going to be more on short side, and on the downside we have yesterday's low at 13, so we have support in that area. A break below 13 would bring the 02 quarter to 04 quarter support into play. First test of it can still attract buyers, but again, the long setups at that point would call for caution. We would be breaking below yet another low, and we could extend all the way down to 92 to 95. So 1792 to 1795. That's a pretty decent spot where we can get a decent response back up towards 02 quarter to 04 quarter. So if we are going to take a long setup below 13, then 92 to 95 is really the ideal spot, where buyers can be active on first test, and we can get a decent move back up to 02 to 04, and potentially even back up to the 13 to 15 area. So that can be a decent spot for buyers to come in, and we can get a better bounce. But again, we are going to have to gauge it in real time just to make sure that we're not in a trend down type day. As long as we're not in a trend down day where it's just pure liquidation, and especially if it's a flush into 1792 to 95, it can be a decent spot to get on board. Below that, we have support at 84 to 86 and 79, 75 to 80, 75. Those are areas that can cap the downside in the event of continued liquidation. Now, on the upside, if we actually start holding some of these support zones, 18 quarter, 1975, and we hold yesterday's range, then we could just be looking at a volatile wide range balance. But again, that's something where the market has to prove itself. We have to see some upside momentum, and so for that reason, these zones are riskier to trade on the long side, because right now sell side is in control. But if we do see that the 13 to 15 holds and buying starts coming into the Russell, then on the upside we can get a move back up to 32 quarter, 34 quarter. A break above that would bring 40 to 42, the gap at 46.75, and finally the 49 to 51.75 zone into play. And sellers can still be active at 49 to 51.75 and even 40 to 42. So right now the focus is going to be more on the short side. The expectation is that TF put in a pretty volatile move back up to the balance highs, but failed. And at this point, TF could be setting up for a range extension lower, and once we get that, it can result in liquidation in ES and NQ. So that's the primary scenario, but we are going to keep an eye on 13 and 15 to see the type of reaction we get. the markets are really volatile, so even the relatively small reactions at the zones are between 5 to 8 points now. So the reward to risk is very good at basically every zone along the way, because of the expanded volatility. Even the relatively small bounce in this environment is quite easily 5 to 8 points, sometimes 10 points. So that means that you'd have to be careful on your trade location. You really have to pick your spots, because with the expanded volatility, you're also having to use slightly wider stops to get on board. So when you are fading the market, especially on the long side, it makes sense to let the market kind of flush out and then take the trade at a better location, or just be willing to skip the idea. On the upside, the short side is working much better. Of course, sell side is in control, but even there, you have to be very aware of trade location and where you're entering in the market, because the expanded volatility, you can get stopped out if you're not using a stop that's really at a logical spot. So keep that stuff in mind. But with this volatility, you're also seeing much better reward side potential at every zone, and the swings are much bigger, which is definitely resulting in better opportunities on the day time frame for traders who are patient and selective, and waiting to get in at the right times at the right prices. There's also a lot of opportunity in this market. So today we're just going to be seeing whether ES breaks 13 to 15 for an expansion lower, or do we simply balance in the day's range. So far, the primary scenario is going to look for a range break to the downside. But if we try breaking and we can't, then because of this volatility, we can also get a big move back up towards 32 quarter, 34 quarter, 40, 42, potentially even gap fill. So let's keep an eye on TF. Ideally for the sellers, the sell side continues in the Russell, and we actually break below 38. That is really what can result in a big push lower in the S&P down to 92 to 95, and potentially even lower. So those are our main thoughts heading into the open. On the econ calendar, we have the Philly Fed survey at 9 a.m. Central. That's really the main econ catalyst this morning. But given how active these markets are, I don't know if there's really going to be much of a pause around that econ report. I think there could be 5 or 6 minutes before the econ. It's good to be careful, but after it's out of the way, I think the theme that's playing out in the market right now is just going to continue. So those are our main thoughts heading into the open. Focus is going to be more on the short side, cautious on the long side, and based on the type of activity we see at these zones, we'll have a better idea on whether we can simply balance in a wide range and go back up, or set up a range extension lower into the 02 quarter to 04 quarter and 92 to 95.